All right. Good morning, good afternoon, good evening to you, wherever you are in this beautiful world. Welcome to our Tuesday morning Inner Circle live session. I'm your host, Ryan Carthage. We'll be joined shortly by my awesome partner, Mr. Benny Allen, and Miss Casey Jackson. It's a good week. It's a good week. It's a good week. Excited to be with you guys today. We're going to dive in. So as always, let's turn off all distractions, prepare your minds and your bodies to engage as you guys always do. And for the courtesy of everybody on the call, please ensure that your mic is muted if you're not actively asking a question or making a comment. All right. So we're going to take a quick look at the fundamental side of things. Then we'll dive into the chart, right? We know we had the RBA, Reserve Bank of Australia rate decision last night. Last night for us in the U.S., morning for folks on the other side of the pond. So we'll take a look at that, see what happened there, and see how the market responded to it. All right. And as we go, we'll talk about some other fundamental pieces that I want us to keep our eyes on as we continue to move through this interesting time. All right. So without further ado, let's hop over to trading economics. All right. So Reserve Bank of Australia raised the cash rate by 50 basis points to 1.85% during its August 22 meeting. The move followed a 50 basis point hike in July, and in June, a 25 basis point raise. In June, and then a 25 basis point raise in May, bring that cash rate to a level not seen since April 2016. The board said the rate hikes over recent months have been required to bring inflation down to create a more sustainable demand and supply, adding that the RBA was committed to taking further tightening, but it is not on a preset path, as the size and timing will be guided by incoming data. The committee noted that 2022 CPI would be around 7.75% and a little above 4% in 2023. The central bank reaffirmed its commitment to doing what is necessary to ensure inflation returns to its target while paying attention to global outlook, which stays clouded by the war in Ukraine, its effects on prices of energy and commodities, and China's anti-COVID measures. The board increased the interest rate on exchange settlement balances by 50 basis points to 1.75%. So the Reserve Bank of Australia increased the rate as expected, right? They didn't go above, but they did as expected. And some key terms that, as I've been looking at these statements and watching how the market responds, when they say the size and timing will be guided by incoming data, right? That puts some uncertainty in regards to future rate decisions, right? We've seen the market respond negatively to that set of words. And then when they say we're paying attention to the global outlook, which stays cloudy, that also puts some uncertainty behind the future outlook. So they came in as expected. When we look at the charts, essentially what we've been watching these Aussie retracements, and what it looks like is those retracements was just the market pricing in this 50 basis point hike. So therefore, as the RBA came out with that rate hike, it was already priced in. They weren't more aggressive, and they had some uncertain terms in the language. And we'll see what happened to the market last night. If they would have came in above, then we would have seen that price continue to push higher. So that's the big news from yesterday. Real quick on the week, we have, it's not what I wanted. We have you got JOLTS job openings. That'll be something that could impact the market. We'll keep an eye there. With the market overall, going to be looking at, we got Swiss CPI coming on Wednesday, ISM services PMI for the United States on Wednesday as well. But Thursday is going to be the really big day for the pound, right? In this rate statement here, looking at a 50 basis point hike coming out of the Bank of England. So that's going to be the big news on Thursday. And then after that, Friday's going to be the day, right? Non-farm payroll, looking at jobs numbers, which is something that Chair Powell said are our key data points for the Fed when looking at where they are in their interest rate and monetary policy tightening. So that's why the JOLTS job openings could be a key number, and then non-farm payroll is going to be a big thing this week. So it's always big, but this week could be bigger because of the statements that Fed Chair Powell made last week. You also got monetary policy statement, right? What was actually discussed in Australia on Thursday. So that could give us a little movement there as well. All right. So that's it from the fundamental side right now. We'll talk about a little bit more as we talk about some of these yen crosses and dollar pairs as well. But that's where we sit. Any questions from the fundamental side of things? No? Okay. Cool deal. So let's take a look. We'll come back to this Aussie CAD because we had a question come in from Ms. Cassandra, which I will answer for you. Looking at the dollar, right? Looking at the dollar continued to press down. We're looking at this level here, right? And we talked about the weekend, it pressed down below that level, but we came back into a level of daily support, right? We came back into a level of daily support. So now the question is, right, will this level hold? Okay, will this level hold? Right now we're getting a reaction, and we'll look at it on the lower time frames. We'll see we're starting to break some inner trend lines. So we want to see, does this level hold here on the daily time frame and give us this turnover and push back to the upside? We'll see, right? So let's drop down to the 4. All right, this is what this looks like coming to the downside on the 4. Okay. Coming to the downside off the high, we had a shallow retracement, right? Didn't get to that 38.2 level, push down, close at that daily support, right? And we created a swing low here on the 4, right? Not a swing low on the daily yet, but a swing low on the 4, okay? So if we get 2 days of bullish action, that'll confirm this daily level as support, okay? Right now we have it on the 4-hour time frame, which is cool, right? Key level, we got a swing low to form, and we're pressing to the upside. Okay, so we're looking at potential dollar retracement here, and we'll see if we're able to break back above this 12,964 level and give us either a deeper retracement or for price to continue higher here. Okay, so that's the downside sub fib look. If we come back and run our fib from the low, okay, we see here, excuse me, this push down just gave us a 38.2 retracement on this capital fib, right? So on the larger move to the upside, we got a 38.2, which we look for. Okay, so now we want to see, do we get this turn and push at this key level? Okay, if we do, and we start to break some of these levels to the upside, we could see those dollar pairs give us another rally. All right, there's some other things from a fundamental perspective. Keep your eyes on United States and China. China's been really protecting Taiwan. I've mentioned this in the past, but things are starting to escalate now. China's really surrounding Taiwan with military ships and planes and such. They've been doing that for quite a few months now. But Nancy Pelosi decided she was going to take a trip to Taiwan, and China said, hey, don't do that. You're going to intervene with our political issues, and we're not going to take kindly to that. Nancy Pelosi said, nope, I'm going to go anyway. And China said, hey, if you do that, we will respond with military action. President Joe Biden tried to walk it back and say, hey, no, she's not going to come. Had a meeting with the president over in China. They talked, uncertain how that conversation actually went. But after the meeting, he said, hey, she's not going to go. This is President Joe Biden. And then it was decided last minute that she was going to go anyway. So China is now moving ships to kind of the line in the sand, if you will, in the strait, in the Taiwan Strait, I believe is what it's called. And they're flying planes up to this kind of line that they aren't able to cross militarily yet. But there's this conflict because Taiwan wants to be independent. China says, no, you're a part of us. And they feel like the United States is trying to step in to intervene in their internal conflicts. So they're not taking kindly to that. So Nancy Pelosi is scheduled to land there today. She might have landed already. And China's not happy about it. So there's going to be continued increased conflict there because China feels like we're trying to step into and intervene on their internal issues. So that could impact a lot of things, okay? Could impact a lot of things, and investors are uncertain about these actions, right? Which is another reason that you're seeing this turn here is investors now are concerned about this U.S.-China conflict that's brewing to see how China actually responds to that. And we had that along with some Aussie data, the Aussie data that came out, and we see this turn. So if that conflict continues to heat up, that could be something in addition to the war in Ukraine that we now have to keep our eyes on, okay? But investors are uncertain and have concerns about the actions, right? So that's one of the causes of this turn at this key level of support. So we'll keep our eyes on that as we move through the week to see how things go, right? But we'll keep our eyes peeled on that. So that's the dollar. We're looking to see if we get a deeper retracement or if price pushes up, takes out the A and continues higher. Okay, so we'll keep our eyes peeled there. Let's hop over to these Aussie pairs. The Aussie CAD, right? We're waiting on this one. Let's go back to the daily. On the daily time frame, right? We had a nice AB boundary. We had this daily level that we're watching, right? With the uptrend line and the downtrend line and the X. And we had price push above, right? And what price did was it pushed to a 50% retracement, didn't quite get to a 618, push higher, okay? And with the news that came last night, push back down below. Now we'll wait to see if we close below this daily level and if we're able to close back below this trend line, okay? If we're able to close back below the trend line, we could be in for more downward movement on this pair, right? So that's on the daily time frame. We got a nice deep retracement, 50%, didn't quite get to our sweet spot, but we did get the turnover there. So as we drop down in the time frames to the 4, all right, this is what that looks like. And this is my trend line running to the upside, right? It was higher like that, but I adjusted it out to take into account this nice long wick here, right? Nice reaction, push back up. Didn't quite get to the sub 50 extension on the 4, okay? But push up, and this is that turnover and push down. So we want to see what occurs here, right? We want to see what occurs. Does price just give us a retracement off of the strong bearish move, right? And then come back down and break the trend line? Or does price continue pushing to the upside, right? Because that's still a possibility. Price could push deeper, get back to this daily level of resistance. Okay, so we'll watch it to see also on this daily time frame, right? If we get today close, tomorrow close, and then Thursday close lower, right? That'll be a new swing high on the daily time frame. Okay, so we'll see if we get that formation to happen from a daily time frame perspective. Because if it does, right, that's just a new level of resistance that will mark like so. Okay, and now we'll have potentially either a range that forms, or we'll see price continue to press to the downside, break back below that downtrend line, and give us a deeper move. Okay, take that up. All right, so that's the look on the 4. And if you come down to the 1, right, what we got on the 1 was a new AB boundary that formed, right? On that push to the upside, that's that new trend line to the outermost point. On the 1 hour, you would have had a more aggressive trend line coming to the inside like so. Okay. But what you got was price push to the D extension on the 1, gave you a new AB boundary, and then push down, right? So again, that question still remains, right? Do we get price to take back some of this move, potentially retest this daily level and continue down? Or does price continue to make its waves back above that level and continue pushing to the upside? Okay, so that's what's going to be key to watch. We broke back below this daily level in a strong bearish fashion. Question is, does this daily level hold now? Right, so that's what we want to see. That's what we want to see, preferably on the 4-hour time frame and on the daily, but we'll see how the market responds to it. Okay, so that's what we're looking at. Push down. We'll see if this retracement happens or if we press higher. Any questions on the Aussie CAD? Nope. Cool deal. The Aussie Swiss, going over these real quick. Aussie Swiss, right? So from a daily time frame perspective, we pushed down. We had shallow retracement, price pushed to the 118, 127 zone, came back to a 236 level, but we're stalling at this daily resistance level, right? Stalling at the daily resistance. So this question of, do we press down and continue moving, right? Through the weekend, this was the move there. Press back down into this daily support, right? With that news from last night. So the question is, do we sit in this range a little bit longer? As we drop to the 4, this is a look, right? So we're sitting in this 118, 127 zone on the 4, just ranging, okay? Just ranging. We got that nice finish to the downside, 120 pip range. Not large, but so we want to see, does price stay at this level and push back to the upside of the range, or does price just give a pullback, retest this 4-hour support, which would have been right here, right? And then continue moving to the downside. Okay, nice strong bearish move. Now it's just about, what does the retracement look like? Is it just a short-term retracement and continuation? Or do we get price to take back the whole move? Okay, let's drop to the 1. This is that range. This is that range. Okay, so we got that nice press to the downside there. All right, so we'll see. Not much doing on the Aussie Swiss right now. Continue to monitor though. All right, the Aussie yen. Man, oh man. Let's walk back here. So from a monthly time frame perspective, this is our, we don't fully have a swing high just yet, right? But we got a nice bearish candle here. If the month of August closes bearish, this is going to be a new swing high, right? That'll be a new swing high, and we'll have a new fib on the monthly time frame that'll look like this. Okay, that'll be key. That'll be key. Okay. So that's a monthly look, potentially creating a swing high on the monthly time frame. You get down to the weekly, and we've talked about this. We've broken this down, right? On the weekly time frame, we haven't gotten a 38.2 yet, right? So from a weekly time frame, fib perspective, haven't gotten a 38.2, right? Pressed up, gave us this double top at the B boundary, then gave us another push to the upside here, but couldn't fully break to the upside. And now we're crashing through levels down. Crashing through levels down. Okay. That's strong. Okay. And if this week closes bearish, we'll have another swing high here. So another level of resistance. If price does turn over, it'll have another level that it'll have to break through. Okay. So as we go to the daily, on the daily, we did get a 38.2 retracement out of this at this weekly support. Okay. But price could not break through this daily zone in this weekly zone, right? It struggled, right? And we saw this, we said, we're going to take this short, right? We're going to look to the short side, the overall long-term perspective, weekly time frame, and with the shift in sentiment as investors continue to be uncertain about current state. Here you go, right? Here you go. Thing is on the run. And what it's doing at the same time is it's crashing through these daily levels, which it struggled to break through in the past, right? One touch here, one touch, two touch, three touch, four touch, another touch at this level, right? Created a ton of support here that price had to break through. And this is a strong bearish move, right? Strong bearish move. So just like the others, right? We want to see as price closes that daily candle out, do we get just a pullback and a retest of this level, right? If we get a pullback and a retest of this level, that level holds, looking for a continuation lower, right? And we'll see on that weekly time frame, price continue to move to the downside, right? So inching towards that 38.2 level off the weekly time frame. This is the larger move that we're looking at, right? Larger move that we're looking at, right? So from the high right now, it's already up 487 pips, okay? With potentially more to go. So as we drop down to the 4, what we're looking for, right, was potential retracement. If we got into these daily support levels, right, those are trend lines that we broke through. We'll take those out now. Now we're pushing to the downside. So what we're looking for over the weekend was, hey, all right, push down into the zone. Do we get a retracement? All right, shallow retracement. Got a lot of daily levels that we had to push through. Do these levels hold and do we get a retracement? Well, that ain't happen. It didn't happen. The price is barreling to the downside now, right? And you can see this a lot more clearly, that break of those daily support levels. Okay, so now, again, it's the question. We get a pullback and a retest, and then a continuation. So just as in the past, these yen crosses, everything was running against the yen, right? Now the role is flipped. Now the role is flipped. And the yen is running against everything. Okay. The yen is running against everything. Yen is gaining strength. There's uncertainty. There's capital flowing into the yen. Okay. So this is what I'm looking for here. We got a break. Now I'm looking for a retest of this daily level and then look for a continuation to the downside here. Right. So as we drop down to the 1 hour time frame, we see here, right? That's that trend line, outer trend line that we broke. But from a 1 hour perspective, AB boundary, we got a 50% retracement, push to the D extension. So once we get a swing low to form here on the 1, we'll get a new fib. And if we get that pullback to retest these levels, 50, 60, 1.8 level, right? If we get this nice retracement here, right? Potentially not even that far, but something back into the zone, right? I'd be looking for swing high trend line break and look for a continuation to the downside. Okay. So if you're not in this, allow that swing low to form, allow a pullback, right? And look for these levels to be retested, and then look for price to continue to the downside. Okay. So that's where we are on the Aussie yen, running to the downside quickly, running to the downside quickly. So there's a chance, though. There is a chance because of how things are moving and with the increased uncertainty with China and the United States, we could not get a deep retracement, right? That's a very real potential, right? Because like I said, just like when we saw everything run against the yen, we've got very little retracement in a lot of those moves. So we could see that play out here as well, and things just give shallow retracements and pushes, okay, if the uncertainty continues to heighten. All right, so that's the Aussie yen. Any questions? Nope. Cool deal. But we see, right, that news just, the bottom just fell out, right? Already priced in, and then price continued to move to the downside. Aussie New Zealand. So look, this is an interesting one. Me and Benny were talking about this quite a bit. You got a couple things happening, right? You're in this range over the long term. You got two commodity currencies, right? And forever, they just range, right? And so we've been ranging for forever, but we came back last month to retest this monthly resistance level, right? So as you get down to the weekly, you see this a little more clearly. Pushed up to this monthly level, came down, came back to retest it. Strong reaction back below. So price is struggling to get above this 111,744, right? So, and then we weren't able to close above this weekly level either, right? We weren't able to close above this weekly level either. So price is at a key level, struggling to break through to the upside. We might want to look at this play to the downside. So as we get down to the daily, what you see here, you had a daily swing, a daily level in conjunction with that weekly level. From a fib perspective in the range, right? B boundary is at that key monthly level and now a daily level as well. Shallow retracement. Here's your double, triple top scenario, right? Right there. All right, cool. Price isn't able to break through, kind of like the other Aussie pairs, got touches and touches and touches, but not able to go anywhere. So price turned over and pressed down. All right, price turned over and pressed down, and it created another swing high, right? So you got the swing high to form, the close of this candle, and then you got the press down, right? So last week, Benny talked about these swing highs and swing lows that form, right? And paying attention to those as they create new daily levels, right? So when you get swing highs and swing lows that form at previous monthly, weekly, and daily resistance and support levels, right? Those are key to tell you, hey, this is a resistance level, price could be reversing, okay? Price could be reversing. So with this second candle here, we got that swing high to form. So now as we continue to press through, we get to the 4, and this is what we have. We got a 38-2 retracement, right? Similar to some of the other Aussie pairs, but that's that sideways push, right? And the 3 touches in that monthly zone. And this is that break back below that weekly level that over the long term, it wasn't able to close above, okay? And then we got a push down. Swing high on the daily, monthly, weekly resistance. And we got to push to the downside, right? So all those things came together, pressing to the downside. You could have had a more aggressive inner trend line coming like this, right? And that would have been your trend line break up above, right? You got that consolidation, so you would have shifted like so, trend line break, continuation, okay? Now, as we drop to the 1, this is the other thing that occurred. While all of that was occurring on the higher time frame, within all that consolidation, this is what you had. AB boundary, shallow retracement, price pushed to the 118 and 127 zone in conjunction with this monthly level, in conjunction with the weekly level, in conjunction with the daily level. And you got that breakdown. Right? So now we're pushing to the downside. We'll see how far this goes. But right now, off the 80-20 scenario and trend line break, we're up 145 pips to the downside, right? If you didn't enter that and you took it off of the break of this weekly level, you're up 100 pips, right? You're up 100 pips. So that's the Aussie New Zealand, looking to see if we continue pushing to the downside on this pair, likely to come to this daily support. And then we'll see if we stay in this overall range and look for a press back up potentially. Okay, so that's the Aussie New Zealand. These trend lines are all good now, serve their purpose. We'll take those out and we'll run trend lines to the downside. And as long as price stays below your trend line, allow that thing to stay below your trend line. All right, moving to the downside. All right, so that's how we'll monitor this going south. Okay, once we get to this daily support level, we'll look to see if we get a reversal and a push back up. Okay, any questions on the Aussie New Zealand? No. Okay, cool deal. And I'm going to talk about this more. These daily swings, daily swing highs and swing lows. I'm going to talk about this more when we get to the dollar CAD. But Aussie dollar. We've been watching it, right? We said look out for that 38.2 level, right? It continued to inch up, right? Continued to press higher. Came to that 50% fib level, just shy of the daily resistance. And we got a breakdown. Strong bearish move here. Strong bearish move, right? You had the rate statement last night, and you have this uncertainty with the United States and Australia, right? It's all coming together in the same areas at the same time, right? So it's only a matter of time before price continues to move in its waves. Okay, so stayed within this AB boundary on the daily time frame, right? But we got a deep retracement here. So now we got this bearish close or bearish push. We'll see if we close, and then same as the others, do we get a retracement to retest this daily level if this candle closes bearish on the day, right? Retest the daily level, and then we'll look for that continuation down. Okay, so as we drop to the 4, I pull that daily fib down because we got that deep retracement, right? But if you ran your fibs on the 4, this is what that would have looked like. This is what that would have looked like on the 4. All right, I'll take those out for a second. You got a deep retracement, shallow retracement, 118, 127 zone. Nice push to the upside, right? Stayed within this 4-hour AB boundary as well, right? I know we're looking for it here at this daily level. We're watching it here at this daily level. Price continued to tick to the upside. And looking at this and looking at how the market's responding, right? This is what tells me that investors were pricing in that 50 basis point increase, right? Because as they were putting these buy orders in, pricing in what price would look like, where price would be at that 50, if they came in at 50 basis points, they were just pushing the market to the upside here, right? Just pushing the market to the upside. So they're pricing in that 50 basis points. And if RBA would have came in stronger, right? It would have continued to push to the upside, but they did not. It was already, the orders were already in. And that's what caused the push to the downside. Okay. So all it was a deep retracement on the 4 and a deep retracement on the daily time frame. Okay. So we got 8-6 retracement here on the 4 hour. Matching extension is here. 67056. Right. And that's as price continues to trickle to the downside, right? Other piece of confluence that we can add in here is running your sub fib to the upside, right? Didn't get to the D extension, which is in line with that daily resistance level, right? So you had a 50% retracement and we stalled right here in this 118, 127 zone. Okay. So price is now pressing to the downside. So we want to see, this is our trend line moving up. Do we stay below? Right. So just like we showed on the daily time frame, do we get this retracement? That retracement would be a retest of the trend line and of the daily level. And then do we get that continuation down? Okay, so that's what I'm looking for there. Pull back, retest the level, and then continue to the downside. As we drop to the 1, this is what that look was on the 1, right? On the 1, it just looked sideways. It got super choppy. Okay. So you wouldn't have been able to even use those trend lines there. Just sideways movement there in that press down. Okay, so on the 1 hour, it looked like this. Right? Break, retest, continuation. That's what I'm looking for on this Aussie dollar. Questions? Got a hand raised. Ebony, what's up?
Hey, good morning.
Good morning.
What was that data point again that showed that we were risk off? Did you say that we were risk off?
Say that again.
What was that data point again that we looked at to see if we were risk on or risk off?
Yep. So FX Street, the risk appetite. We look at the VIXI, and so what's interesting is generally when this number is moving up, we're becoming more and more in a risk off environment. And generally, when that number gets around 20 is when you see all out risk off environment, right? And it's been super interesting to watch the markets as we've gone through this period of time, because this VIX has been super low. And this is the one that I use, but any of these can also be utilized, and it breaks down what the details of it are. Also, the NZD-JPY is also an indicator as well, right? You got your ultimate commodity currency against your ultimate safe haven currency. So a lot of times these move together. However, they haven't been, right? This VIX has been super low, right? It means the volatility in the market is down. Now, it could be a seasonal thing. Around this time, you have a lot of folks taking vacations and such. So, and this is when you hear people say trading during the summer months is slower. Part of the reason is you got a lot of your big time bankers and such on vacation before kids go back to school and all of that. So this is a volatility index off of the S&P. And one of the things that could be playing into this is the lower volume and lower volatility due to a lot of folks being on vacation. I'm not certain in that. That's just my assumption looking at how things are moving. But normally we look at this number being around 20 for us to be in a full in risk off environment. And anything below that was still in somewhat of a risk on environment. But that's the one that we talk about the most, but any of these can be utilized for that purpose. And like I said, along with the NZD-JPY as well, which that one has been moving to the downside. So there's a lot of back and forth on this risk on risk off environment.
You know what, Ryan?
Yo.
When I was following the risk indicator for NJ for on here, it followed the VIXI more than it's on, and it's funny.
It's interesting, right?
Yeah, because I was like, okay, so Vixie say this, NJ say that, and I took an order. I was like, hey, it lied to me. So that's fun.
It's been interesting, man. It really has. It really has. So we'll see if this number starts to creep up as we move through the month. Like I said, we know we don't have any rate statements coming out of the United States this month, but we do have some of those key data points when it comes to employment numbers. And investors are looking at, okay, are we technically in a recession or not, since the government has changed the definition of what a recession is. So the employment numbers are now going to be more of a focus, right? Since I said jobs is a big thing. So when we go into, right, we got those JOLTS job openings today, and then we got non-farm payroll on Friday. We'll see how the market responds to those, because they're going to be more in tune with those, seeing as that's what Chairman Powell said, that's what they're looking at. So we'll see if this VIXI makes any movements as that data comes out as well, right? So yeah. But that's what we're looking at.
Thank you.
You're welcome. All right. Any other questions on these? No? All right, cool deal. I want to hop over and take a look at this dollar CAD. We got a couple other pairs that I'll try to get to, but this dollar CAD, Cassandra sent us a great question regarding this, so I want to make sure that I answer this question, but we'll look at it at the same time because it's in an interesting space. So dollar CAD, right? From a daily time frame perspective, this is where we are. Overall, it's kind of been rangy, right? But price is trying to figure out what it's doing. We know the dollar is pushing to the upside. On this dollar CAD, this is what we have. Let me take this out for a second. This is what we have, right? We had price push up 118, 127 zone, then gave us this breakdown, gave us a 38 retrace. 50% retracement, right? After the second push to the downside. And we came in and we stalled, right? We came in and we stalled. So now we want to see, do we get a continuation back to the upside, right? We know we got uncertainty. Got to take a look at oil also to see how that's moving. But we have uncertainty in the market overall, right? So with uncertainty comes a lot of times a breakdown in oil, and we'll see if that's true. But the dollar is pushing up and gaining some strength. And over the past couple of days, if you look at the charts, all of the CAD pairs across the board took a major hit, which we were anticipating for the Euro CAD, for the Pound CAD. We're looking at for the Aussie CAD too, but that one was a little mixed. But now we're seeing this reversal in this push, right? So at this 50% retracement level, we're starting to see price try to push to the upside. Okay. So as we drop to the 4, you can look at this from a couple perspectives, I believe. So run it fit from the low, right? Yep. From here, right? And as price pushed down here, it took out that low and gave us took out the A, right? So run the fib from the top to the bottom, like so. So here on the 4, you got shallow retracement, price pushed into this 118, 127 zone, right? And then this is what you got here on the 4, okay? You got a morning star pattern, decision, indecision, decision. Then these were previous daily levels, right? These were daily support levels, okay? Daily support. We broke through them, right? So on the 4, the question ultimately is, are we able to break a trend line and break back above these levels, right? So we got a fib run into the bottom. We know we got an 80-20 scenario, right? So we run our trend line to the downside, like so, and we're looking for a trend line break, right? So Cassandra's question, when do you enter a trade like this, right? And you want to, Cassandra, you want to some of these methods out, right? But because you want to determine what you're going to do consistently, because there's a couple ways you can look at it. One is you can take the entry off of the trend line break on the time frame that's looking to trade. Now, I'll get down to the 1 hour time frame because that's the one that you're looking to trade off of, but same thought process applies. So one thing you can do, right? You get a swing low to form and you get a trend line break. You can enter the trade there, right? And look for the move to the upside. It's one way. Because here on the 4, you got that swing low and you got this candlestick formation, which tells you there's more bullish action to come, right? With this morning star pattern here.
Right.
Right. So you got swing low, 2 candles to the right, trend line break on the close of that second candle. You could have entered the trade there. Those are two points of confirmation: swing low, trend line break. Now you have some support levels, which are now acting as resistance levels that also come into play, right? So if you wanted to be conservative, you could also add in, if I get a swing low and a trend line break and price breaks above these previous support levels, I can enter the trade then, right? So one is just a swing low and a trend line break. The other is swing low, trend line break, and a break above resistance, right? Those are 2 ways. The other is, right, and this is an even more conservative way, is I want to swing low, I want a trend line break, and I want to pull back, right? So you'd wait and be patient, which is a beautiful thing, right? Wait for your swing high on this level to occur, right? And now wait for a pullback back into your sweet spot, right? So you're looking for price to do this. Okay. Come back into your sweet spot. Now this is a confirmation. These levels are holding. I get another swing low to form. Price starts to push to the upside. I can enter off the swing low there and look for price to move to the upside. Price came down to my sweet spot. I'll place my stop below the A. So my risk to reward is intact still. And then I'll look for that. So those are 3 different ways that you can enter this trade, right? Trend line break with a swing low, trend line break, break of resistance, or swing low, trend line break, pullback.
Okay.
So those are 3 options for you. And I would suggest in your demo account, testing them, right? See which you're most comfortable with, right? Because if you play it just off of the trend line break with a swing low, right, you could be in a bit more drawdown if price pulls back deeper. In this scenario, you may not, because you have these levels of previous support and resistance. So we could just get a pullback and a retest in a continuation. That's another way, actually, right? Break and retest is a fourth way to look at that. But in some scenarios, you could not have these levels. And if you enter this off of the trend line break, you could be in a little bit of drawdown, which is okay, right? It's okay, because as long as you get the direction right, that's the biggest thing, right? And have your stop below the low, right? And now you're looking at, and you just do your math from there, right? We're looking at 80 pip stop loss, potential for price to push to at least a 38.2. You're looking at a 2-to-1 risk to reward in that scenario, right? If price pushes deeper, obviously that extends that, right? So you just have to figure out how you want to work out your risk and which scenario you are more comfortable with. But those are the 3 options that you could do. You mentioned buy stop orders or sell limit orders. Buy limit orders. I don't use buy or sell stops personally. I don't. There are people that do. I don't. If I'm going to enter a trade that's moving to the upside, it's going to be in the scenario where I have a trend line break with a swing low, and I'm going to enter it off of once that swing low finishes and once that trend line break occurs. I'll enter that trade, place my stop below the low, and just allow price to do its thing. I won't use any of those stop orders. I just feel more comfortable, right, taking these just as market orders in that fashion. If it's a scenario that, and these are just my rules that I'm talking through right now. if it's a scenario where we have some uncertainty and some back and forth between the currencies and some consolidation, what I'll do is I'll wait, right? If I get a swing low trend line break and a break above resistance, I'll wait for a pullback to retest those levels to ensure that those levels hold, and then I'll look to enter the trade, right? So those are the two ways that I look to enter these trades. And then another way, which is more of a longer term scenario, from a daily time frame perspective. If I get a swing low to form, right, on the daily time frame at a key level of support or resistance, or swing high to form if it's a resistance, right, I'll start to scale into a trade, right? If I'm looking at a longer term move, like we've been looking at on some of those yen pairs, right? So that's just a longer term swing trading method of scaling into the trade, and those would be super small orders, right? These orders on the 4 hour and the 1 hour, they have the potential to be a little bit larger because my risk is going to be decreased, right? So those are a couple ways there. Now, as we get down to the one, right? You said you brought your 4 hour fib down to the one, right? So we'll run that. We'll copy this. Bring that down to the one. It goes there. Take that out. We'll put that there. Okay. Now we'll go down to the one. And the same thing applies here, right? So you could, right? You got that morning star pattern on the 4 hour time frame, which is essentially this group of candles here, right? That decision, you got indecision, and then you got this decision candle here, right? So you could also, on the 1 hour time frame, right? You got your fib, so you know what you're looking at from a longer term perspective. Beautiful. Now, how aggressive do you want to be on your trend lines here, right? Do you want to just take it off that 4 hour trend line in this break, or do you run a more aggressive trend line here? Okay. So in the lower time frames, you are able to, the trend lines allow you to be a little bit more aggressive in your entry, because you're able to get more granular in the candles in the trend line break. So you could have drawn this inner trend line here, and on this break, you could have entered that there. Or again, the same rules apply, right? You got your swing low, you got your inner trend line break, but I want to wait for a break of the resistance level as well. So if price gives me a swing low, trend line break, and breaks resistance, which would have put you in the same spot as that 4 hour right here, then I'll enter the trade. Or if price gives me a swing low, trend line break, and now you run your sub fib to the upside, now I want to pull back. So, and I get a pullback into my sweet spot, I'll look to enter the trade in my sweet spot around that 618 level, like so, right? And then you play your risk to reward off of that fib, and that'll be your entry, just like a regular 61.8 or deep retracement entry, right? Look for price to come into the sweet spot, and then take your trade to the upside, placing your stop outside the 8. Does that make sense?
It makes a lot of sense. I entered it once it broke that 4 hour trend line on the 1 hour, and I entered it with a buy stop. But right now, I've pulled my trend line up and I see it broke it. So it's probably maybe heading back down to that sweet spot.
Yeah, you could be getting a retracement, right? And we'll have to watch it to see, right? To see if we push back below these levels, right? Because you see we had a lot of consolidation here. So it is possible that price could just come back and retest these levels, right? It might not give you that deep retracement. So we'll just have to wait and see what price decides to do, right? It could head down, or it could kind of stall here and then give you that reversal back to the upside.
Okay.
Right. So it's just a wait and see there. But as long as you got your risk to reward intact and you know how much you could lose if price pushes you to your stop,
Right.
Just allow it to go. But
Okay.
what we do talk about, where'd you place your stop?
Okay, I entered at 1.2858 and my stop loss was at 1.2807. It was a 51 pip stop loss. And my target is 1.2983, which was that 4 hour 38.2.
All right, perfect. So entry here, 2858, right?
Yes.
Your stop was where?
1.2807.
Okay, so just below that support.
Yes.
Okay,
Mhm.
right. So I mean that's cool, right? You place it below the support, which we know we broke above that level. So if this holds as support again, right, you'll see that push. Just note, right, if it breaks below that, you could see price come deeper in this sub fib, which is
Mhm.
okay. And what I'll say is, if it does push deeper and take you out, just reassess it, right, and see if price comes back to your sweet spot and then stalls and turns back over, because that could give you another opportunity to enter, right, with a different stop loss, right?
Okay.
Something like that if you place it below the A,
Okay.
right? Yeah, good job, good
Okay.
assessment, good breakdown. Your charts were nice and clean, made sense. Good job. Now you took your trade. Now we see how it plays out, and then we go from there.
Got it.
Great work.
Thank you.
Great work.
I have another question.
Yeah.
When it comes to the 80-20, we want price to go to that zone. Sometimes it goes beyond that zone. So if it goes beyond that zone and then heads back down, at what point are we entering? I know we're drawing our trend lines, but we want to see it coming out of the zone before
When you're talking about 618 and deeper,
when we're entering the 80-20 trades.
when you're entering them.
Yes.
Yeah, so that's why we say use your additional confirmations, because sometimes it'll push just below that 618 level, right? So that all depends on how the market's going to move. Sometimes it pivots right in that zone, that 118, 127. Sometimes you will get a deeper push, right? But a lot of times what that comes into confluence with is another level of support that's just deeper in the zone, right?
Okay.
So that's why we say, especially in the uncertain times that we've been in so far, right, using your additional confirmations of a swing low and a trend line break. If you use indicators and all that, you could use that as an additional point of confluence, but using those additional confirmation points to let you know, hey, we're starting to reverse now, as opposed to just setting your limit orders and allowing them to go in.
Yeah.
So and that for me and Benny, when we're in a, I don't like using this word all the time, but in a normal flow of things, right, when we don't have so much uncertainty, we use limit orders here, right, place them right in between that 118 127 zone and just allow the trade to swing. But because the market has been so uncertain and we've seen currencies just run, we added in making sure we have those additional confirmations to ensure that, you know, we get those swings and price doesn't continue to run against us. So that's when we talk about, you know, as you're journaling and as you're watching the market, and as you continue to evolve, you'll make some adjustments to your trading plan. It could be different times of the year, could be different events that cause certain things to occur. And so you'll continue to evolve into that to understand, okay, I want to add additional confirmations here, like those yin pairs, right? For those reversals now, as prices are pushing to the downside, you want to add additional confirmation because those could continue to run in that direction and not actually give you those deep retracements if you're looking to play the B to C move. So, yeah, so we've evolved into that just to be able to tighten our risk up a little bit and give us a little more certainty, if you will, that the trade is more likely to move in our favor by adding in those additional confirmations instead of just setting those limit orders, right? And periodically, I still will use limit orders at the 118 and 127 zone once we get back to more of a level state of fundamental affairs around the world. So yeah, so that's going to be, you know, as you get more comfortable, right, you'll see sometime we've had some that came 2 pips from hitting 618 and then reversed and gave us a nice deep retracement, right? So you'll continue to see it as you continue to practice, and it's just adding those additional confirmation points in.
Okay, thank you.
You're welcome. Any other questions? No? All right, cool deal. I'll take a look at this pound Aussie real quick. That pound Aussie, we were talking about it, right? The Euro Aussie too, which I ended up getting stopped out. But this pound Aussie from a daily time frame perspective, we're talking about this range that it's been in, right? Top of the range, bottom of the range. And we said, hey, came down to the bottom. We got a swing low to form. Look for it to move back to the top of the range. And that's what we get. Strong push to the upside with that news coming out of Australia. So as we drop down to the 4, right? Those are trend lines from the top side down. And we're just looking at a range play. So remove the fib off, right? And just looking at it from a range perspective. We broke through all of our trend lines to the downside, and now we're pushing up, right? Could enter that thing here, and now moving to the upside off of that inner trend line break, currently up 244 pips with quite a bit to go, right? So we got that move that we're looking for, and now we're pushing. Okay, so we'll see how price responds at the top of that range if we stay in it, right? We know we have Bank of England coming in with a rate statement on Thursday. We'll see how the market is responding then. If the market continues to be bullish, right, we'll be tracking this daily 38.2 level. That's not it. That's the daily 38.2 level there, right? So we'll see if we get a break of this cluster at the top of this range. If we do, we'll be looking higher for sure. If we don't, then we'll look for this range play to continue and look for another move back to the downside. All right. But that one's moving in a nice way to the upside. The Euro Aussie, similar deal, right? Another one we're looking at. Haven't gotten that 38.2 on the daily time frame, right? Been in this range, came down to these daily support levels, right? So we drop to the 4. When we look at it, that's that daily 38.2 level. There are my fibs, right? On the 4, we did get a 38.2, but we pressed back down. And then look, beautiful scenario. Finally got the swing low to form. We got a double bottom scenario there. And then we got our push, right? Push right back into a weekly and daily resistance level, right? So now, if you're not in this, still got potentially some ways to go. Look for a pullback. And then look for a continuation higher, right? But this is on the go as we anticipated. It just took a while, right? We had this crazy sideways movement. It took a little bit, but we finally got our push to the upside, right? And our trend line breaks. So as you get down to the 1, this is what it looked like on the 1, right? Sideways push, shallow retracement, trend line break, bang, right? So now it's a question of, all right, we get our pullback. Oh, that one got taken out. Overextended. So, oh, so once this, no, that should be a swing high. So this will be new fib there, right? So do we get price to pull back into our sweet spot? Maybe retest that trend line that it broke, right? Also, you got levels of resistance here in this area, right? So look for a pullback into the sweet spot. And if you're in this already, opportunity to add to the trade if you get those rules met, right? If you're not in this, right, from a longer term perspective, we still got a ways to go if we're going to push to the upside still, right? So if you get this, nice entry opportunity, place your stop below the A and allow the trade to go. All right. So that's what we're looking for. Pullback, potential continuation. Questions on the Euro Aussie or the pound Aussie? No. All right, cool deal. Right. So things that we've been looking for, right? They're on the move. They're on the move. They're on the move. They're on the move. Last one I took a look at is pound CAD. Daily time frame, right? This is one of those, Cassandra, right? Shallow retracement, pushed through the 118, 127 zone, but did not get to that D extension. Just barely missed it, right? That wick didn't get there, right? And we got this turnover and push back to the upside, right? So it happens like that sometimes. But we're getting the swing now, right? Strong push to the upside as those cash started to really take a hit. Drop down to the 4, right? On the 4 hour, we got to that 38.2 level, right? We talked about this last week and the week before, right? So that was a beautiful risk to reward scenario there. Got to pull back into our sweet spot and we got the push, right? So if you just played it off the 4, I was steering at 55 pips to your take profit back to the resistance level and at 38.2, okay? And now it's a question of, do we continue to get this push to the upside, right? As we drop down to the 1, this is what that looks like. So now you're playing your fibs on the 1. Whoops. Now you're playing your fibs on the 1. You got a 618 retracement, getting a pullback to retest this previous resistance level, the B boundary, right? Look for price to continue moving up, right? You got a weekly and a monthly level to break through. See if we're able to do that. And if we are, look out because we could be moving to the upside even further. Okay.
In cases where price, like I think you were on the daily or 4 hour where it barely misses the D extension, do you have your target prices right on that D extension level or a couple of pips prior to it, thinking that when it hits it, or gets close to it, it may bounce off?
So on this one, I didn't have any limit order set. I took this one off of just a market order.
Okay,
so
no, what I'm saying is, say if you had played that to the downside, if you had taken that and
gotcha.
you're heading towards the D extension, is your target price directly on the D extension or before that D extension?
Yeah, we say place it just before, because depending on the broker, right? Sometimes they come up a little short. So we'll place them just ahead of the extension that we're looking for, or even if we do set limit orders for deep retracements, right? We'll set those just in front of.
Okay, maybe about what, 5 pips in front, 3 pips in
So
front?
that's I do 5 pips. But that all depends on your broker. So that's, I think Joyce had this scenario quite a bit. So each broker is going to be different, right? In the price and where it is. So, and the spread. So you're going to have to kind of play around with that part to determine what that sweet spot is for the broker that you have.
Okay, got it. Thank you.
You're welcome.
Ryan,
Yes.
I think I found something that's kind of been working for me. I don't know. So what I've been doing is, because what happens is a lot of times, like 5 o'clock, depending on when you put them limit order ins, the spread, it either increases or decreases. Sometimes so when it decreases, it works in our favor. But when it increases, it's like about 5 o'clock. So what I've been doing is putting my orders in during the Asian market instead of and I'll just take the hit with the larger spread at night, because if it decreases in the morning, I could just look to just go ahead and exit out, because it's just, I've been missing too many by 1 and 2 pips, like literally be like not hitting that mega million. But I've also been I've been practicing this about taking the entry off the 618 point off that candle that I'm looking at for price to reject that.
Say that one more time.
So like when you was doing UCAD, my entry, I had put my order in on I made a special fib. I just took one of them fibs and I canceled it out. And I took that, you see that candle, that buying candle, I took my fib and ran it up and took my entry off the 618 off the candle. Yeah.
So you just something like that.
Yeah, I closed all them other ones off. Huh? Actually the 30.
30 minute. Okay.
Yeah, actually the 30.
So the biggest move here.
Yeah. And it's kind of, I've been getting a little bit more better than that. And I don't know what made it, was just, that's something that I was taught long time ago, and I just never used it again. But then because my orders kept getting thrown off by 1 and 2 pips, I said I'm gonna have to dig down to the candles. I meant to ask you if that was something right to do, or
well, I mean that specifically is a scalper strategy, right?
Okay.
Literally looking at that 1 hour, that 4 hour candle, and running the fib on that candle, look for the retracement. And a lot of them, they'll place a stop below the swing low, right? And then they'll look to scalp those moves, and they do it. I've seen cats do it on like not on time frames like this, but more on the 5 and the right. So they'll take that 1 hour, just like you did, a 1 hour candle, something like this.
Yeah.
And they'll drop down to and they'll drop down to the 5 minute and look at it like this. You know what I mean?
And I guess my psychological point of that is, even if I'm going in for a swing trade and I'm trying to find this perfect entry, and I know it's no such thing as perfect entry. I wasn't mad that I wasn't hitting them, but everything that I set up that missed by 1 or 2 points was a winner.
Yeah, well, I mean, and I'm with you on that, right? So find out what works for you as far as where to set your limit order.
Yeah,
and that if it works for you, it works, right? So you set your limit order here, you still place your stop below the low, or you place your stop below the low in the higher time frame.
I'm doing it. I'm still putting my stop below on the higher time frame. Okay. I'm just trying to find an entry point, because if I'm gonna get in it anyway, why not try to see if that worked? Because I'm getting in it anyway. But especially if I'm getting in it late too. Yeah,
for sure.
Yep.
Keep the data on that. Let us know.
For sure.
Good work, everybody. Any other questions before we wrap it up? No. All right, good people. Well,
Ryan.
Yes.
Good morning.
Good morning, James.
I just have 2 questions. On the fibs, the 2 shaded spots, what do they mean?
I'm sorry, say that one more time.
On the fibs.
On the fibs?
Smart fibs.
Uh-huh.
It has 2 shaded spots. What do they stand for?
The last 2 shaded spots?
Yeah, the fibs, the smart fibs.
Oh, the red and yellow, or the green and those are just telling, it's just the smart fib identifying your sweet spots, right? So you got, this is your, anything in the green zone is your buy zone, anything in this yellow zone is your up push zone, right? And then the fibs coming down, right? Anything in the red is your buy zone, anything in the yellow is your down push zone. So that's just identifying those sweet spots for you with a color. That's all.
Okay, thanks much. And the other question is, I've been trying to find this pair, US 500 XPX, and I can't seem to find it. So how do you find it?
You're looking for the S&P 500.
S&P 500.
It's SPY, not SPX.
Oh,
That's
SPY.
this trend. Yeah. Yeah.
And it's only on the NASDAQ feed you get it?
Yep.
Okay then. Thanks much.
Yeah. So SPY is the one you want to look at.
Okay. Thanks much.
You're welcome. Yep. Yep. But I'm looking for price to turnover on this one. Right. We'll see what happens. Right. Head and shoulders pattern overall played out for us almost to the T. Right. Crown pattern played out for us right down to that take profit level. Now looking at from a daily time frame, we're sitting at a 61.8 retracement. Right. Looking to see if we get a turnover, press back down to the downside. Right. Stop loss here on this one is wide, but that's on my 4-hour time frame. Be above the A. We'll see if we get a turnover on that. If we do, it'll be a nice move to the downside. I think it's coming. I think we do head down to that 314.82 at 31,000 on your regular scale. But I think it's coming. I think that turnover is coming. I think your indices are going to start pressing to the downside. I think the uncertainty in the market, we're going to see at some point that risk appetite. I think we're going to see it turn south. Just my opinion. Based on my analysis and in my readings, perusing of those internet. So, any other questions? No. All right, good people. Appreciate you showing up this morning. Ben will be back with us tonight, 9 p.m. Eastern Standard Time for the Asian session. You guys have an awesome, awesome, awesome Tuesday. We'll see you tonight. Peace. You are welcome.
Bye.